Hi everyone. Once again, welcome back to my channel. That was last week. I tried going live to bring you guys good stuff and what you guys were supposed to expect for the market the whole of this week gone by. But it wasn't so fruitful, so I decided to go back to my old traditional way of getting you information. All right. So today I'm on a volatility 75 index, just as I have been analyzing. So if you are new to my channel, I'll urge that you subscribe. And then if you are a returning viewer, thank you for always being with me. All right. So last week, I happened to have posted within the course of the week some trade that you were supposed to have taken. Okay. And beautifully, it panned out the way it was supposed to. And with volatility 75, I was able to call out this trade. The weekly bias, I told you that was going to be bearish on the live video, and you could see how beautifully the week started on Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, and today being Sunday. We could see how far the market has really gone. All right. So for those of you who are live on my channel, I guess you got good stuff out there. All right. So quickly, let's go to today's video and we see how the week ahead is going to look like. So we're on volatility 75 index, and today being Sunday, we are looking forward to the week and what we are going to expect. Okay. So what are we seeing happening on the market? So from Monday to all the way to Wednesday, we had a little bit of consolidation. Okay, you could see the market consolidated. All this area is regarded as a form of consolidation. All right. So you could see how market consolidated within this area. And coupled with the consolidation was an expansion lower. Okay, an expansion lower. And then what did we have in here? We had a retracement leg back into the consolidation. And then we had another expansion lower. In a typical bearish market, this is what we usually want to see. All right. We usually want to see market form higher highs, and then we have lower lows. All right. And beautifully, ICT power of three makes us understand. Okay. And one of the things you should always bear in mind is that the market always has a pattern that it moves. When we are in a bearish market, anytime we have consolidation, the only thing that happens after a consolidation is either a manipulation before the expansion happens. Okay, so when we have this consolidation in here, and then we had the expansion happening, automatically we know that if we're going to have any form of reversal or retracement, the market is not going to reverse above the consolidation. If the market goes above the consolidation, then it's obvious the market has shifted structure. Okay, so this is a clear clue that, okay, we had a consolidation in here, we had an expansion lower, and then if we are having a form of retracement back, we are not expecting this retracement to go above our consolidation. Okay, we are not expecting this market to go above our consolidation. So this leg up here is more like the manipulation leg. Then it gives room for the market makers to join in on the market, and then we could see the expansion lower again. All right, now let's break the chart down further and see how a little bit of things added up for us to also have a fair idea of what actually transpired. So when we had this consolidation, what gave us a clue that, okay, at this point, we could even enter a trade or we could join the market. You could see from Monday, this form of consolidation is so difficult to trade because market sweeps the highs, it swept the low here, goes up, sweeps the high. It's difficult. engage in this form of market, market retraced back into this fair value gap, expanded higher. It didn't close above this high in here, which was a failure swing. Market comes down, closes below this swing low right in here. It has taken down the liquidity resting below this low. So now it gives you a clear picture that this is not a no-go area, or this doesn't represent a shift in market structure, because it begins to sweep the highs and then it sweeps the low. You get it? And as it swept this low, it came down to sweep this low resting in here as well. And then what did we see? We had market all this form of consolidation. Market goes above it to take the buy side liquidity resting above it. Now, on Tuesday, we had the market doing something in here before it moved up in here. It began to form this low, high, low, high, low, and then a higher high. All right. And then this is, because this is a manipulative leg, you might easily believe that, oh, so far as it's broken this high with the body of the candle, it means that it has displaced to the upside. No, it doesn't happen that way. It doesn't work that way. Insofar as we are in a consolidation market, and then as well, we are in a bearish situation. So knowing your bias for the week is really, really keen. Okay, knowing your bias for the week is really, really keen. All right. So when it happens that way, appropriately, what you do is you want to see how or which direction does the market. So with this form of swing high, swing low, it was just a pattern. Okay, so this was just one of the ways that market actually cook liquidity. Okay, so we had this swing low right in here, another swing low right in here, another swing low right in here. So this is what we call the phantom. Okay, the trend line phantom. The retail mindset believes that this is a trend line and price comes to the trend line and continues higher. No. Okay, these are all form of liquidity that has been staged. Okay, this is a staged liquidity that, insofar as we saw price rally down on Wednesday to sweep all those liquidity resting below these consecutive lows in here. All right, these 3 consecutive lows in here, automatically we should know that we are in for a kill. Then what happens? When price does this, what do we see? We saw price leaving a fair value gap right in here into this up close bullish candle, which actually took the high resting above this relative equal highs, which gives us a clear picture that we have to give it a short in here. Okay, we have to give it a short in here. And then what happens? Price retraces back into this area, into this fair value gap, and then we see the breakdown. Okay, so beautifully, this is where we had to take the short. So some of these things are things that gives you a clue and gives you a picture of how to engage in the market. On Monday, probably you might not have gotten a good trade. Tuesday, you might not have gotten a good trade, but on Wednesday, the picture was so clear. The picture was so clear right in here. Okay, if you are taking in a short in here, your stop above this high. So imagine you had taken. So these are some of the telltale signs. You see when market is staging liquidity, okay, to be run. When market begins to stage liquidity to be run, okay. So these are all short-term liquidity runs that market actually left in here, and then it took the long-term liquidity, the high resistance liquidity run above this one, and then a low resistance liquidity was just taken briefly, and then price retraces. So quickly, this is how you could have thought of engaging. Now, this pattern is one of the patterns that ICT has taught. See, anytime we have market forming swing lows and swing highs, especially close to taking a high, a previous day high or low, and price begins to do this, it gives you a clear telltale sign that price is not going to explode higher. Okay, it's not going to explode higher. When it happens this way and it stages liquidity and then it is grabbed, then you have a clear picture of the direction of the market. So beautifully, this is what happened on the market with volatility 75, and then we had a rally down when price rallied down on this day, on Thursday, it consolidated. It consolidated for a while, and then market dips into the sell side liquidity resting in here, rallies above it, comes down on Friday, okay, takes the sell side liquidity resting below it again, rallies higher. So the high resistance liquidity, you see that price will be taking high resistance liquidities. So first of all, it's taking the sell side resting in here, comes up, takes the buy side resting in here, then comes down again, takes the sell side resting in here. Obviously, when market begins doing that, then it gives you a clear picture that there's something happening, okay? Coupled with this happening, let's see what the market does. It goes up, consolidates further in here, another small form of consolidation in here, trades back into this area, trades up, back again into this area, expands. This is not a real expansion, you know. This is a manipulative expansion. Okay, so with ICT power of 3, price has opened. Let me break it down on this day for you with the power of 3. Price actually opens in here, okay, goes up, comes down. That's the manipulative leg, and then we see the expansion higher and comes and close all the way down in here. All right. So beautifully, this is how the market was operating. Okay. So all this leg up here is a manipulative leg. So now if market had opened in here, okay. So watch this. If market had opened somewhere, let's say this is a 4 p.m., 4 a.m. time window, market had opened in here, expands higher, comes back into this opening price, and then continue the expansion higher. If it doesn't go above this, then we saw the manipulative leg happening in here. Because we are in a bearish situation, we knew we were going to. So when price was expanding, all you were supposed to do was just to hunt for where you're going to have the reversal. Now let's go down to 15 minutes time frame and see if we can get a clear picture of where market actually did the reversal. So the 15 minutes time frame, let's look at the 5-minute time frame. I'm sure we'll even get more clearer picture in here. So beautifully, I was looking for, when market did the expansion, I was waiting to see where market would do the reversal, okay? And it goes in here, and you see this was a failure swing, and market goes up higher and comes down further, and it breaks below this low, low right in here. So this low right in here was taken. This low right in here was taken at this point. You could see that there was a displacement right in here. Then what do? We have market expanding into where? Into this fair value gap. You could see it tapped into the fair value gap right in here. And it was a good entry, could have taken to join in on the market. And then boom, the market begins to break down further. And we had all the way price rallying and coming down all the way into this area. So as beautiful as it seems, and it is as is seen on the chart, you could see how currently the market is consolidating. Today is Sunday, and I'm not really expecting much from the market. It had probably done all that it needed to do, and I'm expecting. You could see all this form of, these are consolidation in here, that price has taken the low, taken the high. You see, it came down again, and its price took this low. It came up again to take this high, came into this fair value gap, went up to take this high. Now it's coming down to take this low. So in this area, I'm seeing some form of consolidation happening in here. Okay. So my expectation is not so much for what's happening in here. Okay, but yet still, now what do we want to say is the final destination for what's happening on the chart? Okay, for our destination on the chart, we want to say our final destination on the chart is a swing low. There's a particular swing low dated 2019, February 24th, okay? There's this low resting below it, okay, that we're expecting price to actually look to take. All right, this low, this is what I'm expecting price to attack, okay? So as beautiful as that, that's what I'm looking at price taking. Okay, so let's look at let me try and put line for you to see what I'm referring to. So I'm looking at this low in here, okay? This low in here, I'm looking at price coming down to sweep this low, okay? That's what I'm looking at price currently seeking to do. Okay, first of all, this low is a target. The low fruit hanging in here just some few days, some few weeks back. Okay, this low, this first low in here is a target, and I'm expecting price to sweep this low, and then whatever it does, we'll look at it after price has taken this low. But ultimately, I'm expecting if price takes this low and this displaces, I'm looking at price sweeping this low as well. Okay, so currently we are still in a bearish market trend because you could see how price forms higher highs, lower highs in this market setting where we have a high in here, high in here, high in here. Price trades back into this fair value gap, bounces off. Price trades back, consolidates in this fair value, inside this fair value gaps in here, and then we see the bounce off. Okay, why are we not expecting it to retrace? Currently, price has even traded below. So let me show you. You could see if this continues, or this bearish candle in here is an order block, you would want to see price trade bounces off, not close below 50% of this bearish candle. Now, on the monthly, it gives you a clear picture that this is where we are trading. Monthly is not being restrained by any form of order block. So we are looking at targeting this low in here, and which should price target and take down this low. This doesn't hold as an order block anymore. Okay, on the daily, you might say that, oh, okay, we have these two consecutive down close candles which might serve as an order block, but which is not so. We feel that there's a fair value gap resting in here, therefore this qualifies and becomes an order block. No, we are looking at price targeting and taking down this low. All right, so that is that for today. I wish you all the best in your trading. If you are new to my channel, please do subscribe. So the target is this low. So if you want to engage this market, we are looking at, should price do any form of retracement up and you have a form of reversal, maybe on a 1 hour time frame, then you can engage the market and then nicely target the low resting below the just recent low on the daily time frame, okay, which is this low in here. Okay, all right. So if you are new to my channel, please do well and subscribe. If you are a returning viewer, give me a like, give me a thumbs up. If you have anything to say, you can share your thoughts in the comment section, and then we'll get back to you. All right, so I wish you all the best in your training. We say do enjoy the rest of your evening. See you in the next video.